Hey, what's up guys, this is Gerard, back to you with another video on taxation. In this video, I'm going to be talking about amending income tax returns for taxable year 2020. As of recording this video, generally taxpayers have already filed their income tax return for taxable year 2020. We all know that the government did not extend the filing of income tax returns, but nevertheless gave a way to alleviate the burden in filing the annual income tax return by allowing amending such return until May 15, 2021. This is based on Revenue Memorandum Circular 46-2021. Take note that amending such return may not result to increments such as interest, surcharge, or penalty. In addition, if in case the amended return resulted in overpayment of taxes paid, the taxpayer can either carry over the overpaid tax as credit for the same tax type in the succeeding period. Second is to file for refund within 2 years from the date of payment. So let's have an illustrative problem on these. A retailer had gross sales of 1.4 million with cost of sales of 560,000 and allowable deductions of 150,000 for the calendar year 2020, which was its second year of operations. Its total assets of 18 million as of December 31, 2020 per audited financial statements include the land costing 500,000 and the building of 2.5 million in which the business entity is situated, with an aggregate amount of 7.5 million as fixed assets. Assuming the partnership filed its annual income tax return on April 15, 2021 using the old income tax rate with the intention to file an amended return on May 15 using create law rate, compute the tax due for the amended return and tax credit of the taxpayer for the succeeding taxable year. In the computation, we will be comparing the tax due using create law rate and old rate. In doing so, we use the transitory rates provided by the BIR under Revenue Memorandum Circular 50-2021. So for those categorized as domestic corporations in general, with the taxable year ending December 31, 2020, they will have a transitory rate of 27.50%. Notice that the entity shall not be subject to MCIT being only in its second year of operations. Comparing the amount paid on April 15, which is 207,000, with the tax due from the amended return of 189,750, the tax credit as the taxpayer opted for this option is 17,250. Take note that it is only creditable against the same tax type as per RMC 46-2021. Therefore, in our illustration, this amount cannot be credited for percentage tax, doc stamps, donor's tax, and etc. In our second problem, a manufacturer had gross sales of 1.9 million for the fiscal year ending October 31, 2020, its fifth year of operations. Its total assets amounted to 5 million net of the value of the land of 600,000, where its manufacturing plant and business operations is situated. Its cost of sales and allowable operating expense amounted to 1,850,000 respectively. Assuming the taxpayer filed and paid its annual income tax return on April 9, 2021 with the intent to amend its return before May 15, 2021 using create law rate, how much would be the tax refund and when is the deadline for claiming the tax refund? Similar to what we did in the previous illustration, we will compare the income tax due from the old corporate income tax rate with the create law using the transitory rates. It is the fifth year of operations, so there is a need to compute MCIT along with the computation of normal income tax due. As shown, the MCIT shall be the amount of income tax due as this is the higher amount. Based from the income tax return, the paid amount was 38,000, whereas from the amended return, it shall be 31,160. Therefore, the tax refund would be 6,840. Now, with regards to the tax refund, as the taxpayer opted for this alternative, the excess amount paid can be refunded within 2 years from the date of payment of such tax. The deadline for claiming the refund shall be on April 9, 2023. In applying for tax refund or tax credit, use BIR Form 1914 and submit a letter categorically stating the intention of availing tax refund or credit duly addressed to the RDO having jurisdiction of the application. Note that there may be a mandatory tax audit to grant your application. Lastly, attachments and documents relating to the filing and amending of the return shall be signed by the taxpayer or its authorized officer through electronic signature. This shall be deemed as equivalent to an actual signature for filing purposes. And that's it. So let me know what you guys think about the Revenue Memorandum Circulars I mentioned and the means of computing the amended returns. If there's anything that you'd like me to cover in connection to this video, let me know in the comment section. So if you found this video very helpful, please give it a thumbs up and make sure to subscribe and hit that notification bell because it helps me create more videos like this. So this is Gerard. Have a great day.